I have to mute there first. All right.
And you could start your video from the start if you want.
Going.
You're watching Master Trader Live, simple market analysis and education to help you make money in the markets. Join us live each week on YouTube and see past episodes at Master Trader Live. And now your show hosts, Greg Capra and Dan Gibby.
Hello, traders. This is Dan Gibby. I'm here with my partner and friend, Greg Capra. And in these weekly trade reviews, we review one or a few trades and we show you very interesting master trader concepts in actual trades that we've done. And because we were very active last week, and many of these trades involved gaps, we decided to do this presentation live, Greg and I together here, to show you, because gaps are something that provide opportunity to day trade or swing trade every single day. Here's how we define the different categories of gaps. First of all, what is a gap? Very simply, it's no trades took place between those two candlesticks. They obviously occur more on the daily time frame because something closes at the closing price. There's a supply imbalance, a supply-demand imbalance the next day, and that opens up that issue at a different price. Now, we have certain names that we like to call some of those gaps, but with anything that we do at Master Trader, that's just a starting point. You have to apply the entire Master Trader concepts, which are, we'll get to this, which starts with a pattern, and then we see where that pattern is. A professional gap, or pro gap, as we call it, that's one where we say it's igniting a new move. Okay, what does that mean, Dan? Well, it could be a downtrend or a sideways trend, and it's a shock event clearing significant resistance where a new bullish move is going to start based on the pattern on multiple time frames. You'll always hear us talking about this concept of price void, which means look to the left, and there's a big insignificant area of resistance for longs for the issue to move higher. Novice gap, the issue's already been moving, and now it's the last of the Mohicans. It applies either on the greed side for a gap up or on the fear side. Something's been following 10, 11, 12 days, and then it just gaps down, typically on bad news, and you get this novice type exhaustion gap. Continuation gap, well, it's another bullish or bearish gap, but it's like midpoint. It's continuing a prior initial bullish or bearish, more igniting move. Now, some people like to force a name on every gap. No, it's not. So you'll hear us talking about, well, yeah, that's a bullish gap, that's a bearish gap. As with any pattern, any gap, you have to apply all the Master Trader concepts that make up our method to see whether we have a quality high probability setup or not. So where is that picture in the trend? Is it on support or resistance? What about multiple time frames? What about relative strength or weakness? And then the price void that I just mentioned. So not all gaps are tradable. That's just common sense. And this trade review today that Greg and I are doing live, Greg, where's your video, by the way? That we're going to show you just many examples where all the concepts at Master Trader are come together, and these are all high probability trades, stock and option trades that we did just last week for our subscribers and our newsletters. So these we call these bullish money patterns. All 9 of these independently are bullish. Now, as I said, we have to apply the other Master Trader concepts, this being some of them here: trend, support, multiple time frames, relative strength, weakness, price void. So of these 9, you might say, well, I don't see any gaps here, Dan. Well, gaps can happen on any one of these. But the one I'm going to start with is this professional gap, igniting a new move. And that happened on plant, which I'll show you in a second. So Greg, are you there? Maybe you want to take this one because it's from your course.
And yeah, I'm here. My screen is flickering and I don't know why.
All right, there you go. All right, so yeah, that's Greg Capper, obviously, and he has this advanced gap strategy course where, like with anything you teach, he breaks it down into a logical, objective, methodical analysis to say that's a quality gap, that one's not. And as a new student, rightfully should say, all right, well, what's an objective? What? Tell me how to do that, Greg. And so this slide I pulled right from his AGS course. So Greg, why don't you take them through your 7-point money gap checklist?
Just closing down a few things to see why this thing is flickering as one of the screens. But yeah, so everything we do is based on putting together a trading plan, or what we call a systematic approach. So as we look at that, well, very simplistically, did a gap above or below some support or resistance?
Right here.
And another way that is to just say, hey, if it gapped above resistance, it has a high probability to go higher. Well, that's a starting point. As Dan just said a little while ago, well, with these gaps, you look to the left. So just because it gapped above resistance, is there any resistance now directly to the left that might stop it or not? And if there isn't, that's what we call a price void. So check one, this is a good gap and it's got the high probability of continuing to go higher because there's nothing to the left. So the idea behind this void concept is that everybody trades with charts is looking to the left to say, hey, you know what? Here's this area of resistance and I'm going to sell there. Well, if there's just a void, meaning there was a big momentum move, or maybe there was potentially a big gap down where this little, what Dan is showing here, there was a gap down and it recovered, and it probably did happen. I can get my little drawing thing out here, Dan. I like to draw. So maybe this had come down and then it went sideways for a while. It came up and it cleared this resistance. And then it went sideways like that very nicely. And so now when it gaps up, and again, we're assuming, because the way I'm talking here to explain the point is that there's nothing to the left here.
Sure.
And so now from there, it's like, okay, check one, great. Is it gapping above a wide range bar, a topping tail or a bottoming tail? Yeah, here's a topping tail. Check two.
Okay, but tell them why that's significant.
Well, okay. So just like we look to the left from a bigger picture point of view, right? Like we're talking about over here. Well, within this trading range, look at what's over here. There's a topping tail there. So on a smaller time frame, you can see it here, but let's say that maybe on a 15-minute time frame, intraday traders saw that come up there. So as this moved up from here, let's clean up my little cartoon here. As this came up from here intraday, when it reached that point, sellers came into the market and knocked it down.
Right.
And so it became a topping tail at the end of the day, which by definition, a topping tail means sellers took control, and it's kind of a little bearish bar, but it didn't break down, right? Because the big support is here. Now, I'm going to get a little deep into this, but okay. What happens now is that you had these sellers, maybe that there were some longs over here. And as that came up and they saw that go down, just put yourself into the chart. You would sell, and okay, that has the not an idea, but the effect of removing supply. And people think, oh, that's going to break down there, and I'm going to short that, on the close, and it's going to go down. And then it gaps up, and they're like, holy crap. So the effect of that is now to add demand. And so we have this scenario where getting above a topping tail bar, it has this supply demand effect, but also this psychological effect. So from there, okay, we're building here a pretty good, case for prices to this gap to work out. So did it gap above or below a base? Yes, it did. So this thing was consolidating all of this time after a move up, which tells me people are thinking to buy, right? Maybe they're, when are they originally thinking to buy? Well, if you saw this go up like this, what's your first idea going to be? I'll buy a pullback.
All right.
Yeah, why not? That's normal, right? So if it'll pull back to this minor support area, one of these and form a buy setup, great.
No brainer.
It ain't pulling back. And now, you've got these little bottoming tail bars here, and that's kind of a shallow pullback, and resistance is right here. It could be a continuation pattern, but I'm not loving it. There are other factors. I may actually do the trade. I don't know, but okay. So if I'm in the trade, my stop is down here. Now, when I see that bar, I'm like, man, crap, man, this thing ain't going to work. Right? And then it keeps going sideways. And I'm like, what's going on here? But now when it breaks out and it's gapping above a base, now everybody that's in that base is saying, man, I got this thing locked. It's time to add. So it adds another supply demand effect and a psychological effect. Gap has a void above or below. So for our conversation, we're saying yes. Gap has relative strength or weakness. Well, what does that mean? Well, it's gapping up. Did the markets gap up? It could be like an equal thing. Maybe the markets gap down, but not significantly, a little bit. So that showed relative strength compared to the market. And we could look at other stocks. Maybe the market's gapping up, but other stocks within the sector, maybe they're not gapping up. So it's showing relative strength. Gap size is ideal, okay, or too much. Well, how do I define that? Well, some common sense. If it gaps and it's relatively close to where it cleared the resistance, that's pretty good. It's pretty almost ideal, or it's okay. It's fine. Whereas, this was closing at, I don't know, let's call it 68 and a half. And let's say it opened up at $80. It's like, man, that's so far away from any support. Can I trade that? Not immediately, but I need some intraday information, which is a little bit too much for what Dan and I are discussing here. But anyway, when it's a relatively small gap like that, I'm either going to get in on some kind of continuation pattern, which could be a 5-minute high. I much prefer pull back. So this line here is referring to pulling back. You can see $70, give or take. It's pulling back near this area. So that's my pullback pattern. What I want it to happen here, right? Just because it's a momentum move. This momentum move created a void. This gap up created a void. This pullback into this minor resistance area, right? Let's extend this over this way and kind of puts you right here, right? So this is this. And now I get this little pullback and reversal. Like, take it, buy it. Now manage from there. Now, end of day base. Well, that was the last one. So this is getting pretty deep into the gap course, but the idea here is because it was an end of day base, right? It was consolidating at the end of the day. It was a topping tail, so it went down and then it went sideways to clear the topping tail rather than this. So more common sense comes into this. Whereas what if the daily bar was like this, right? That's your daily bar. Let's change this a little bit here. Make it a little bit more intuitive in a way. And this is your daily bar. Now, inside the daily bar could happen in two different ways, meaning it could have started the day like this and ripped to the upside all afternoon, or it could have ripped in the morning and went sideways all afternoon. So gapping up from the base, the end of day base, is a much higher probability setup for a continuation move on the gap.
Yep. Just two things to add to that. Number one is just because these are on our tier one, as I call them, gap list, I put them in a 5-minute thumbnail at the open. And what, I think Greg has a 2-minute here, 2 or 5, however aggressive you want to get on board. But I'm looking for one of these, any bullish pattern I'm looking for on the intraday time frame to trade that bullish daily pro gap. Now, there's some times, so let's say this thing opened up at $71 and change, and you see it pulled back where Greg got on board at 8 minutes later. Let's hypothetically say at 10 o'clock reversal or the end of the day, it closed at $68. So then you have a nasty bearish engulfing bar. So the point I'm getting at is again, what I just started with. We've gone through that entire checklist Greg just went through. Check, 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 check. Now all I'm doing is making sure it acts the way I want on an intraday time frame to confirm that bullish bias. Secondly, volume is secondary to us, but 90% of the time, these bullish pro gaps, you're going to see big volume. You're going to see volume pre-market. You're going to see volume at the open. You see that, this volume bar dwarfs the other ones. So that's it. So let's look at some examples now. And so this was the main chart I was going to show you for the trade review. And then when I was reviewing all of last week's trades in our weekend video for subscribers, I just jumped out at me that there were so many beautiful gap trades that Greg and I gave last week. And that's why we're doing this live impromptu like this, because we have so many great gap examples to show you. All right, so this one's a professional gap. Big, 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 long, multi-month bottoming pattern. You can look at these moving averages here. We use the 20, 50, and 200. This Planet Fitness was in pain. So now it's getting out of the emergency room. It had a deep retracement, lower low, 100% retracement, higher low, back to the high, 20 MA curled up. This is what got my interest, Greg, so the other people. This green bar right there told me gap down negated, closed right back into that resistance. This stock doesn't want to go down from here. The next day, it had another little gap breakdown and gap down into the bar, closed back at the high. That's what we call a bullish 1, 2, 3. So Greg, do you want to take it from there? Why we were so excited on that gap? And let me add one more thing to Greg's gap 7-point list. Of course, that's what you want to do when you're learning gaps. You want to take your time. You don't want to rush. But when I'm busy in the morning and I have all kinds of beautiful trades I'm stalking in the morning, I kind of summarize it into 2 steps, because that way my brain can just process it instantly. I have a compelling gap with a price void. Yep, I got that. That's gapping over all this resistance from a 3-month bottoming pattern, and look to the left, I got my price void. Now, I didn't see this one actually until later in the day. I forget exactly what time we put these trades on, but it's not going down. This took out the first 15-minute bars low and didn't go anymore. So we actually did 2 trades on this. I'll show you another one in a moment. But this is a closed trade, which is why it's in this format in our closed spread trade sheet for our subscribers. So we bought a half lot here. It says 74.14. So I guess we got in right around in here somewhere. And then we give the technical reason. A bullish gap breakout from huge bullish inverse head and shoulders bottoming pattern. And then, we give trade management, we give stop loss. We made $531 in 6 days. Our spreadsheet just automatically calculates $300 max loss per trade, just for the sake of plugging in share size. That spit out to be 98 shares because our stop was under the prior bar's low. We made $5.42 a share just going in a simple trail mode.
So Dan, I'm going to show something on this that besides what you explained on the gap, why this trade is just a high probability of working out. So considering relative strength and weakness, this is a current chart of what's going on right now in the markets.
They're all last week.
This is a very significant high in the market. So if you look across many stocks, the broader markets, and many sectors, there's very few that are back up to this point. This stock before last week was there. Everything else got there this week. Say like the technology sector ETF, XLK, or the QQQ. That only got there this week. This stock was already there and going sideways at that resistance area. And then, it had this gap down reversal. So this stock, for whatever reason, was showing amazing relative strengths, which could only mean institutions were buying it. And whatever the reason is, fundamental, that's not what we're into. But the fact that this was already at the June high and going sideways was pretty impressive in this bear market. As Dan walked away to get a water or whatever.
Yeah, sorry about that. All right, let's go. So here's Greg's advanced gap strategy course, mastertrader.com/AGS. You can go there, read about it, all the bullets, but that's today's subject. So now I'm kind of giving a bonus here of all these other trades we found. Some we did stocks, some we did put spreads. Market had a nice advance last week, and we were very active in doing both, in being long stock and selling out of the money put spreads, or naked puts and put spreads. And here's a simple picture explaining what that means if you're new to selling options. We're technical based traders. Everything starts with a compelling chart. And as you'll see with PLNT, if we have a directional trade, I immediately see if it's also a candidate to do what I'm going to show you right now. So we had a bullish pro gap on PLNT, any one of these patterns. So we sell a put option under support. We take in that money, and we have from the put buyer. So we have an obligation to buy the underlying at that strike price on or before expiration. And in return for that obligation, money is deposited into your account. It's yours to keep. And you just have to buy the stock. But we trade these 95% of the time. That's a naked put. So now if you want to do what we call a bull put credit spread, we take some of that money from selling that put and we buy a further out of the money put. The difference of that is the credit that hits our brokerage account. That's our potential maximum gain as long as it expires worthless above this green line. All right, so doing a spread, it's less buying power at the brokerage firm, and you have less maximum risk in the event of a big gap against you. All right, so that's laid the groundwork there. Now look at all these beautiful examples we did just last week. This is the identical chart, PLNT. And Greg, I love asking you this question. So we shorted the $60 puts way down here. I did the math. This was at 75 bucks when we entered. So if you divide $15 divided by 75, the stock can fall 20% all the way to this green line, and you still make money. And so I'm showing you this little magician here because this is not hocus pocus. Greg, if we started this, if you labeled this live webinar saying, hey, I'm going to teach you how to make money and the stock can go 20% against you, I wouldn't watch it because I would say you're a snake oil salesman. But that's the bet that you do in selling options. We're getting paid for using our technical approach of predicting where a stock will not go by expiration. And then we manage in between. So this one had a beautiful 5-day rally. Here's the 200 period moving average. Here's resistance. Broader markets also reversed on Friday. We just took our money. Look, closed half at 30. And I said, look, the stock and the market are extended. We avoid 27 days of remaining risk. On to the next trade setup.
So Dan, we know that this opportunity isn't typical every day. To be able to find options that far away from the current price that has that type of premium, to be able to take that. Any idea why?
Yeah.
Doesn't that suggest that there was some pretty big bearish bets or huge protection out? Somebody's buying those options for them to be worth so much.
Correct. That could be one. But number two is we entered this when it was 30 days or 31 days to expiration. So it's more expiration than we're used to. That's number one. But number two is it did have earnings coming up. Which is going to jack up the premiums. But I agree with you. And that's why we were willing to put on this bet because, this is a pattern I would be willing to sit through earnings on because I don't see this thing having, the stock's been in business, trading publicly, however many years. I just don't see it gapping under $60 on earnings. And I could be wrong, of course, but it's a calculated.
That's all the trade is a belief based on the chart, or for us, the chart that prices will go up, down, or stay sideways.
So
but to some extent, we don't believe that it'll move. Like if something was trading at, $5 and you said, hey, do you think it'll hit $40 in the next 3 days? And it's like, hell no, not unless somebody buys it out. So there's extreme things and there's things in between those extremes that we believe. So like this thing you're saying going to $60 in a certain amount of time seems highly unlikely.
Right. All right, a couple more examples here. These were all last week we gave to our subscribers. So this thing's getting me dizzy here. But okay, now you got my interest. I have a wide, and Greg actually last week's MT Live was on reversal bars, range expansion bars. So here's a perfect example. Range expansion engulfing on major support. Now another concept of Master Trader is retracement. Now I have 100% retracement. Now I have a little bull flag here. Okay, you got my interest here. And then I have a little inside bar right here with a bottoming tail bar. Now I have a gap breakout of this bull flag. So we bought the stock, breakout a bull flag at the 20 MA, bullish engulfing weekly, which you can't see. And we sold into strength here. It says right here, 28.82. We sold another third and had a 38% return in 5 days.
And that had a void.
Every one of these have a void.
Yeah.
Absolutely. Yeah. Bottoming pattern. Marriott, we did this on a couple of these hotels. And so this one, we actually did both. We bought the stock, and here's what it is, a gap breakout of a bottoming pattern at the 20 MA. That's why we entered this. So we bought that gap breakout, went into trail mode, made 5% on that one in 4 days. But we also, at this green line, sold a $5 wide put spread, 50 cents a share. So 10 contracts, $500 hits your account, as long as that green support line holds at expiration. These are so easy. There's another one, another gap. And that's why it's
No,
so-
they are. Credit spreads are the easiest trading vehicle, I think, out there. I mean, everything's easy when you hear it explained, and this is how you do it and all that. Now, that doesn't mean there isn't any risk. It doesn't mean every single one of them is going to work out. But what it means is if you understand the chart, because this is not, there's so many, I'm not going to say other people don't do it, that they don't use charts with options. But the vast majority of these option services and people that are into options, let's just say they're purists. So they no charts. We've got our Greeks and, so on. But when you add a chart to this, and the way Dan and I are explaining it, where, we use terms like red bars ignored and gap reversals and, everything that we talk about week to week in these MT lives is that, look, and then you get a gap and you say, hey, all these buyers were happening, during a certain area. Do you think it'll go down here? And even without any advanced knowledge of MTS and what we're talking about, just common sense would say, well, I don't think so. And if I said to you, well, do you think it'll go down there in the next 3 days? We'd all say, hell no. And if I said to you, well, do you think it'll go down there in the next 40 days? Well, maybe, but no evidence of that right now.
Right.
Should we take that trade? And so we come to an educated conclusion about what we're going to do within a certain amount of time based on the pattern and based on how much premium we can get. Because sometimes they might, we can go so far away and you might say, well, you know what, we can get 3 cents if we have to wait 40 days. And I'd be like, that ain't worth it. Forget it. Move on. So, there's always these elements of, is it worth doing it? How much time is involved? How potent is the pattern? What's happening in the broader markets, maybe within that particular sector, and then that relative strength and weakness concept. So it's easy. Everything's easy once you've learned how to do it. And that's the truth. Then the experience over time is what gives you confidence in what we're showing you. So it is a method. It is a process. That same thing as going to school, get the education and get, experience, do it yourself, teach your spouse, you teach someone else how to do it, and kind of keeps driving home the concepts, especially when someone starts asking questions.
I would say teach your 8-year-old son also. Seriously. Greg, here's actually, as you were talking, here's a great example of your 7-point checklist. That's a nasty bearish gap in a downtrend, but that's excessive. I mean, just look at this. It's excessive.
Right. Let me answer this question here, because you know better than myself. But Lou, the answer to which one of the letters this was given in is that the weekly options trader focuses on credit spreads of 10 days or less. All right. The advisory letter will go long the stock. It'll go short the stock. It'll do debit spreads. It'll do, credit spreads of more than 10 days. Whereas the weekly options trader is just credit spreads, 10 days or less. And probably the vast majority of them are probably, 5 days, 7 days. And if we can get, options expiration on a Friday, if we can find them expiring that day, even better.
Exactly.
So, I mean, if you could just point out which ones, Dan, that you're showing to, but if it says that we're buying the stock long, that's the advisory letter.
Yeah. So this one's, kind of similar to whatever one it was. Deep bottoming pattern at the 20, little bull flag here after a deep retracement, gap reversal. See, these are all little nuances that we pick up on. And I say them fast, but picture where this stock opened up on this day. It gapped under 5 bars and then closed with a bullish engulfing bar. Then another bullish inside bar with a small gap negated. Then I have a small gap breakout over all these. We bought it. It's a bullish gap breakout of a bottoming pattern at the 20. I'm not showing it, but it was a W bottom on the weekly. It's another swing trade. I mean, we're traders. Ulta here. So again, same concept. What started getting my interest were these two gap downs negated. Greg, what was the message of this red bar right here?
Well, it means it's going down, right? Because what happens is, we always look into the left. So, and we always look at patterns beyond, oh, that's just a bearish candle. Well, it gets more detailed than that. And what I want to point out here, maybe where it doesn't necessarily meet your eye, but you see this high, and you see that high. The red bar is, the high of the red bar is above that bar. So as this was going sideways, it was creating a thought on some time frame with some traders that it could break out, which is reasonable. Forget the moving averages. It's reasonable, right? Moving averages are subjective. We like them as visual aids, but it took out that bar as high and it got slammed. They're going to hit the stop. So now with that bar is bigger than all of these. So breaking it should send it careening lower. Now it's got this support point here, but based on that failure,
Right,
it should break through it. And then it doesn't. And what that communicates is that somebody with a lot of money could give a damn about that red bar. And when it gapped lower, they bought the hell out of it. And then when it closed here and it gapped lower the next day, they bought the hell out of it again.
yep,
Right. So this is what's called passive buying, meaning that institution, and I'm saying institution because these are, daily candles and they create these bars over time acting together, whereas intraday traders can participate. But they bought it sitting there on the bid saying, I'll take it, I'll take it. So now when it gaps up,
Yep.
they have a decision to make. I don't think I'm going to get filled on the bid anymore because now the cat's out of the bag. Now I have to become an active buyer, and they take the offer. All right. So the ask is what you're seeing on your level 2. So they become active buyers at that point because now it's obvious to everybody. Anybody could read a chart. It's obvious to them that it's not going to go down. And so now, as it goes up, bar by bar analysis, and you manage.
and notice here on the gap breakout day, the very small tail. Remember the two intraday charts that we showed you? It means that it didn't pull into the gap very much. So that's strength. So I don't know what time of the day, and Lou asked me to tell him this was in the weekly options trader, of course, because it was less than 77, it was less than 10. I forget how many days exactly. But I don't know if we entered a 5-minute high or 30, I don't remember throughout the day when we put it on, but we sold a $15 wide. And many times I really don't care. I would sell it naked, but I don't want to take up that much buying power, particularly for our clients. And so I always look for a spread, both for buying power and also less max loss. And I said, hey, I don't care about $15 wide. I'll go down to 360 because I'm wanting a big credit. And so Greg, once this took out a 5-minute bars high, we're odds traders. The odds of that failing and then coming back under this green line in a couple of days, and it says here I had a W bottom also on the weekly. That's a high probability trade right there.
Yeah. So again, let me give them a little bit of a advanced tip, so to speak, in that when you see a gap like this, the majority are going to be thinking, the buy set, it'll fill the gap. In reality, it should not fill the gap because it's a pro gap coming from a pattern like this. It could fill the gap, but if the demand is truly that strong, it's not going to fill the gap. But you see that little tail right down there? The moving averages are covering things, but you can see that little tail right there.
Right here.
Yeah. What's going to happen, you see it opened here, and the tail means it went down. One of the first charts that was being displayed showed you a chart that it gapped up and it came down. So what if you were looking at, say, a 5-minute chart or a 2-minute chart, what you're going to see, if I can draw this as I eyeball this, right? You're going to see this. And then it gapped up here, right? That's the open of this bar. This bar here, that's the open. And what happened was, this is your gap fill. It's where it gapped up from. That's the close of this bar. But what I teach in the gap course, and what you see it happens all the time, is that this opens and it pulls back, and this bar is where the buyers show up, which is the top of the red bar. So they show up here, and now as it starts to go up, this doesn't get filled, and that's where it starts to make its run.
So again, folks, I hope you're seeing that. Look, every one of these trades was just last week. Number one, number two, whether you're a day trader or swing trader, whatever the environment is in, we find gap trades pretty much every day.
Dan, you know what, you and I are very, very good at being totally open with those that are, especially our subscribers, but of course those that come to MT Live that don't know us.
Correct.
And we don't want you to think that this is like, you know, money flowing every single day of the week. We're not like that.
We have losses, absolutely.
Well, not only that there's losses, but the markets tend to have opportunities that could, let's just call them feast or famine at times. And there are moments in time where things set up across the board. And, you know, and that's great because now you got more ideas than, you know, you don't know what to do with, of course. And then there are other things where we're waiting for them to set up. And so our subscribers going through a period of like what's happened over the last week or so, you know, and now because the markets ran up last week, they're at resistance. We'll see how they're going to pull back. We got, you know, earnings reports coming out, the Fed meeting and everything. We're probably going to become a bit less active early in the week. And so, you know, subscribers will say, hey, you know, they start emailing Dan and, hey, Dan, you know what, you know, can you stop joking around, pay attention to the market? You know, where are the trades, man? And then I was going like, we're waiting for the setup. We're here working, but there's nothing here at the moment. Or there aren't that many. So there are times where the ideas are flowing and there's other times where it's a little bit more of a struggle, which is normal.
So, you know, as you're talking, Craig, I was just thinking that Home Depot here, this is a great example of how we use bar by bar analysis to change our opinion on one or two bars. So we actually shorted a bear call credit spread on Home Depot the prior week on this ugly reversal bar on the gap down, a little bounce on the gap down there. And it went against us that day. We're like, man, this thing is strong. And then it gapped down the next day. We're back in a profitable territory. And the thing kept rallying in our face. So I think we had a stop of 5-minute high or something, and we closed it out at a gain. So that was on a bearish setup. Now, today we're talking about gaps. These were gap reversals. I think just like on many of these other examples, I have started the conversation with, this is what got my interest. These two gap downs reversed. Here's another example. These two were both bearish gap down days that closed at the high. Now I have a gap breakout. So we sold a $10 wide put spread. So on this, and this one actually did retrace. You can see it closed under the open. But guess what? We didn't buy this one. We said, I don't think it's going under 280. And this was in the weekly options trader, Lou, another one. And we bought $10 wide just to make it a spread. If you did a 10 lot, $740 immediately goes into your account. It's yours to keep forever. You're just agreeing to buy Home Depot at 280 on or before expiration. But as I said, 95% of these, I don't want to own Home Depot at 280. I want to keep as much of this 740 as possible based on the charts. And we just went into trail mode. Every one of these were last week. Tesla here, we tried twice. Well, actually, this one was the week prior, now that I'm counting the days here. So Greg, on this one, and we love the fangs of selling credit spreads just because they're very active and good premiums. And so we've been talking about gaps all day long, and I've been telling you about gap failures, and here's another one. This had a bearish gap down this particular day, and it filled the gap and closed with a little range expansion bar. The next day was an inside bar. That's when we sold. We sold this one. We sold a $30 wide put spread for $212 a share. Last Thursday is this bar. It gapped up from this big multi-month bottoming pattern, converging 20 and 50. Look at that gap, Greg. Just cleared everything here. And notice the tail is virtually non-existent. So regardless of whatever $20 gap or whatever it is, I don't even know, or whatever the size of the gap, it just kept going higher. So I gave this pre-market weekly options trader, Lou, plus gap from a bottoming pattern at the 2050 after earnings. I'm thinking in my head, I want to sell a $50 wide. Why $50 wide? Well, because I want as much premium as I can. It closed at 409 a share, and I said, we'll advise. So 650, you see right here is 650, well under, Greg calls them lines of defense. I don't see this going below 650 in a week. I mean, that's a beautiful gap breakout.
And, another person doing credit spreads or service might say, you're going to sell 150 wide. Those people don't know what the hell they're doing. Well, the truth is that we read charts so well that we know, and of course, this isn't part of belief, that we are like 99.9% sure that Tesla is not going down there in that amount of time. So yeah, we will go wider than what many will say is the typical 5 to 10 strike spread because we want to get that extra premium.
And just to add to that, since you open the can of non-technician option traders, Greg, the majority of them without a chart bias would say they just have a belief on earning stocks, whether it's pre-earnings or post-earnings. Just sell options, calls and puts, because they say the premiums are historically overpriced. Just sell options. And the problem is, here's a great example. You would get run over by a truck on the call side, on the bearish side, on a pattern like this. So we're only focused on the bullish side. Now we do sell condors, and in fact, one's in the weekend letter. As you know, Greg, it's AutoNation, AN, Alpha November. Go look at it. The viewers, go look at AN. It's in a beautiful wide sideways consolidation, major resistance above, major support below, and we sell a condor on a pattern like that. Greg's has these amazing scans he's created in TC2000, and I'm busy in the morning with opens and my interest list as it is. Greg does a great job monitoring new trades on his amazing scans. Gaps are one of our favorite scans in the morning, wide range bars. We have no shortage of trade ideas, with this. And, you'll never hear us use the word, oh, that's proprietary, master trader, this and that. we share these scans with subscribers because we want you to learn and profit with us. So why would we not?
Because we're nice guys.
Right. All right. So, everything stock and option, that our approach starts with a bias on whatever instrument you're trading, any time frame you're trading. That's Greg's amazing swing trading course. It puts it together in these thought building modules. So even though, Greg and I can 1/8 of a second look at a chart and unconscious competence tell you bullish, bearish, or no interest, that's what this course will give you, the fast track foundation of accomplishing that. We just threw this together for you today. Swing 200 is the coupon code. You get $200 off. And since we're talking about gaps here today, here's Greg's advanced gap strategy course. I gave you the link earlier, but this is Greg, if you don't mind posting it, or I can do it. Well, yeah, I don't have the post here.
Is that the checkout, Dan, or is that the page?
Yeah, the checkout. This is the checkout.
Okay.
AGS I showed earlier is the page for the telling you about the course.
All right, well, I posted the link to the actual course.
Yeah. This is the checkout.
And so everybody understands this is what he's putting as swing money. If you type it in, it's going to take you there.
Checkout page, right?
And that's where you could enter that coupon code, and you could get the gap. If you scroll down, right? If you purchase the swing course, if you scroll down and you click one of those buttons
right
down there where you can add the gap course, it's 50% off.
Yeah, amazing. They're both priceless. I mean, whether you're new to trading or been trading 20 years, we have people take them in all categories, and absolutely priceless. Well, Greg, I think that's a wrap. That was a good little impromptu tag team here. I hope everybody enjoyed it. Feel free to email Greg or me anytime. Greg at Master Trader, Dan at Master Trader. And
again, hope you guys enjoyed it. We typically don't do these on a Saturday, but Dan asked me, what do you think about reviewing? What are you prepared for a weekly lesson? And I said, sure, let's do it. Since you had lots of slides and examples, we can share that, see who's around. Actually, it's Sunday, right? On a Sunday on YouTube to learn a few things. So we shared lots of stuff from gap strategies. And as always, if there's any questions, just email Dan or myself, and Greg at Master Trader and Dan at Master Trader, and we're happy to help you out. All the best. Enjoy your weekend.
$7. Come see us in the green room in real time. Have a great weekend, everyone.
Thank you for listening to Master Trader Live. If you liked the show, we invite you to share this video on your timeline or tag a friend who wants to learn stock market tips. Stay educated with our free chart of the week, a weekly analysis or lesson sent right to your inbox. We're live every week, and you can subscribe to the channel and press the bell to get alerts. If you've enjoyed the event, please give us a thumbs up. Just visit mastertrader.com. That's mastertrader.com.